Hello, everyone. Happy New Year. Happy New Year. And wishing everyone a happy 2022. And hope that everybody had a great 2021. And we are all looking forward towards what the market brings us in 2022. And hi, I'm Ming Hon. And this is our Traders Talk, where we will actually share with you everything regarding trading the stock markets. Yeah, trading the stock markets, and we specialize in trading of options. And for those people who follow us or who actually want to learn how to trade the stock market using options, this is a show you need to actually follow. And of course. We will share you a lot of contents to actually help you start up your trading journey if you're new. And of course, if you are uh, already trading the markets, then of course this is the show for you to actually get updated to what's happening in the market, and also what are the things that we are keeping an eye on in the stock market, and just to give you some views on what's happening and what are the kind of stocks which we are trading, and what are the strategies which we are using, and of course many more things to share. Yeah. So for those who have just joined us, give us a thumbs up so that we know that you are here with us on the first show of the year, and we are greatly excited for you to have actually joined us. Yeah, and of course, if you would love to help other people, help other people to also learn trading to take up trading. And of course, this is a great opportunity for you to share this Trader Stock Show to all your friends on Facebook, so that more people can actually join us. Yeah, and of course, today, like any other week, we try to actually bring in new contents, and today we're actually going to talk about creating your own stock radar. Yeah, we will show you how to actually create your own stock radar, and of course, these are to actually find opportunities to either trade or to invest. Yeah, to invest. Yep. All right. Okay, let's get started. And of course, the 2021 has been quite a volatile year. Of course, the market has went up. The S&P 500 has actually went up about 26 to 27% last year. Yeah, but not without its volatility. Yeah, let's see how S&P has actually performed last year, just to get a glimpse of what has actually happened in the market, and basically how have we actually traded, or how have we actually um, take a look at how we can actually plan ahead for 2022. Yeah, let's put this up. All right. So how have your year been? It's actually the fourth day of the year, and I hope everybody is safe, and you had actually also taken an opportunity to take a break off year end. And let's see. Yeah. Oh, this is eBay. Okay. All right. Okay. So this was actually the SPX, the S&P 500, which is actually the main index of the U.S. market, where we basically use it to gauge what's happening in the overall market. Just let me set this up first. Yep. And as you can see, the market has actually reached all-time high. The last week, towards the last week of the year, it has actually reached 477. No, high is 4808. 4808 is actually the high of the market. Yeah, despite all the things which has actually happened in 2021, COVID and all this Omicron, Delta, interest rates hike and everything. Yeah. Um, the market has actually been continued to be very bullish. Yeah, let's take all this out. These are all history. Okay, let's get this. Yep. Yep. So if you can actually see the markets, right? I mean, over the past how many 12 months, I mean, we have actually had a lot of volatility, as I said. I think in total, we actually experience about 10 or 11 dips in the market. One in starting early February, and then in March, and then a small one again. This was in early March. This was in end of March, and then this was in May, and then this was in small one in June, and then in July, I think the Delta wave came, and then a small one in August. So this is 1, 2, 3, 4, 5, 6, 7. This is a bigger one, 8, 9, and then this was somewhere in December. So there was actually one in early December and one after middle of December. Yeah, so you can actually imagine how volatile the stock market has actually been. And of course, when we actually trade the markets, if you are actually investing, of course, each of the dips is an opportunity for you to actually uh, um, add on to your investment portfolio if there are opportunities in any of the stocks which you invest in. Yeah, and of course, if you have actually done that, then of course the overall market has actually rewarded you very well if you have actually done that. But of course, not everybody would have the guts to actually do that, because you would not know whether at each retracement whether there will actually be a bounce or you will actually continue to go down. But of course, 2021, all the market retracement has actually been quite small. I think on average about 5% or less each time. Yeah, there were some bigger retracements which actually scared a lot of people out. I think probably this would be one of the bigger ones, which is only about 6% here. Yeah, and of course there is actually one more here, which was also about 5%. Yeah, so more or less about 5% each time, but a lot of it are actually very sharp drop, just a few days, or and then basically it rebounds in within a week or less than 2 weeks. I think the longest here was probably 7 September to 4th October. It's probably a month. The one in actually the September was the longest one so far, I think. Yeah, the rest are actually quite short. Yeah, but of course, what brings us in 2022, I mean, nobody can actually predict it. But of course, overall, the trend for the market is still on a uptrend. The trend for the market is actually still on a long-term uptrend. Yeah, and of course, if it continues to actually perform like what it did in 2021 with some shallow retracements, it is actually normal for the stock market to actually do that. Yeah, so let's see what happens in the days or in the months to come, and how we can actually trade the markets regardless of how to say, regardless of whatever situation they are in. If you are trading options, if you are trading options, then of course there are many type of strategies where you can actually trade it up or even trade it down, or even trade it if the stock market does not move. Yeah, so that is actually the great thing about learning how to trade options, because we are multi-directional traders using options as the trading instrument. Yeah, of course, if you are trading stocks, you can only either trade it up, means long the market or long the stock, or you trade it down, which means you short the market or you short the stocks. Yeah. Okay, so this was actually SPX, and of course, the other major market component, which is the NDX, which is the Nasdaq 100, right? I mean, over the year, it has also performed similar to S&P 500, and it has also gone up by 20% during this time. Yeah. Let's see. December is here. So it has actually gone up towards here. Oops. There you go. December. Okay, all the way to 31st here. Yeah, about 27%. Yeah, about 27% up for the year, similar to what the S&P has performed. But of course, if you look at individual single stocks, some stocks has actually performed also around the market, which is 20%. And of course, some stocks even has dropped 40, 30, 40, or even 50%. Yeah, depending on the sectors. Of course, China side, as you guys are aware, it has actually dropped quite big on the China tech stocks, especially. It has dropped more than 40 to 50% for some of the stocks, like Alibaba have been depressed for quite many months. Yeah, and of course, the other tech stocks which has outperformed in 2020, in 2021, it has not been that that good, right? Yeah. So if you look at stocks like DocuSign, which has actually outperformed the market in 2020, right? Was it? Yeah. So you see all the stocks here, all the tech stocks have actually gone up a lot in 2021, faced some retracements in 2022. Of course, the fundamental ones like Facebook and all, it has generally performed also okay in 2021. Although for Facebook, it has since September, yeah, went down by quite a lot, but over here it is actually trading sideways within the range of about 300 to 350, and it seems that it is trying to actually breach again the 350 level. Yeah, 350 level. But anyway, Facebook has also been one of our more profitable trading stocks, yeah, for the year, yeah, because of also its volatility, yeah. And of course, when the stocks are volatile, it also gives us a lot of trading opportunities, yeah. So that is actually something which is not always bad for traders. If the stock is volatile, at times it can also give us a lot of opportunities to actually put in trading positions, yeah, trading positions when it retraces. Of course, there are always trading opportunities to actually trade it up. Yeah, so these are all the opportunities which we had throughout the year during the major retracements. Yeah, to actually take the trade opportunities whenever we can. Yeah, yeah. But of course, not all of these works in our favor. Some of it would also fail. Some of it will also fail. For example, if you were trading Facebook based on the 50 MA line, 50 MA line here, then of course at this point here, the trade would have failed because it has actually dropped all the way down to the 200 MA line. Yeah, so this would be one where you will not win. But of course, if you have more wins than the losses, then of course effectively your trading account would be positive at the end of the day. Yeah, so this is actually what we try to do as a trader. We will actually try to win more than we lose. Yeah, win more than we lose. Yeah. And of course, if you trade based on risk and reward ratios, I mean, even if you um, uh, win 40%, if you are working on the strategy of getting a risk of 1 to 1.5, then 40% expectancy, that means positive trades would also give you an overall win in your portfolio if you're actually following that kind of strategy. Yeah. So there are various ways for you to actually win in the market. It depends on which kind of trading patterns which you choose to do. Yeah. But for myself, I would actually trade on multi-strategy, and of course the income strategy is actually one, that means one strategy which I actually use more often. Yeah, more often means that I do sell a lot of options, selling of options, whether it is naked or whether it is actually on a defined risk type of options where we sell to actually collect premiums. Yeah. So those are some of the strategies which I use on top of directional trades. Means that trades where we are directional. That means we want our trade to actually go one way in order to profit in the market. Yeah. So these are basically the things which we do, or what has 2021 brought us a lot of volatility. And of course, throughout 2021, we had also learned how to say, we have also learned a bit more from trading in a volatile market, So one thing which I've actually taken on a learning process also for myself is that in a volatile market, basically the trades which we do uh, tend to tend to be more profitable if it is actually shorter. That means you enter and exit in a shorter duration. Yeah, because I mean within a year, right? You're actually talking about having 10 retracements, and basically that is more or less about once a month. Yeah. And if you're actually doing a longer term trade, right? Longer term trade before the trade expires. I mean, if you are trading options, right? Say normally if you actually do a 2 month trade, and of course say during the first 3 weeks or the first 4 weeks, the trade is actually very profitable for you, and of course on the fifth week, of course, when the market actually comes down, right? The market actually comes down, then of course the profits which you have actually generated and very happy on for the past 3 to 4 weeks, you will actually see them getting wiped out. Yeah. So of course, this was one thing which also happened to a lot of my trades during 2021, where basically there were a number of trades where we actually needed to even extend the duration longer than 2 months, mainly because of this kind of volatility. Means that when the trade is actually up, then market retraces, then the trade gets into a loss position, or a loss position. Yeah. Or you lose up the profits which you have actually generated. Then of course what happens is that we try to repair the trade, extend the duration. Yeah. And of course, if you are trading options on selling premiums means collecting, then of course there are opportunities for you to repair trades, means to extend duration, to try to get out of the situation without a loss, or even a profit at the end of the day. Yeah. So that is one thing which is beneficial for options traders who sell premium, because there are opportunities for you to repair trades. And of course, if you are only directional, and if you are only doing debit trades, means that you are buying or paying to buy options. Yeah, that means you buy options Then of course, when the market goes against you or the stock price goes against your direction, then of course it is going to be a straight on loss to your position, because your options value will actually go down very fast if you are in those type of trades. Yeah. So of course that was some things which we tried to also tweak during the year. And of course, if we go on a directional trade, means we are paying to buy options, we tend to get out of the positions in 2 or 3 weeks, no longer than 3 weeks. Yeah. And of course, sometimes it is even nowadays, some of the trades which I do, I even get out of it in within 2 or 3 days, or in less than a week. I get out of the trade. Take smaller profits, and try to recycle your capital on new opportunities, on new trades. Yeah, that comes along. Yeah, so take shorter duration if you are directional. And of course, if you are doing selling premiums also, try not to wait too long before you actually exit the position. I mean, comfortably, if you are up by 50% on in terms of your premium profits or the decay, then exit the position and try to establish new positions, or just wait for opportunities to come by, or for market to actually drop, or the stock price to retrace, then enter new positions. Yeah, of course, if you have traded the market using this type of strategy last year, it would have been very profitable for you. And if this year it happens the same kind of volatility, then we continue to actually apply this type of strategy, and that would also hopefully be doing well for our portfolio. Yeah. So coming back to getting trades, and this is actually for traders, right? For traders, a lot of times it is actually very, how to say, you sometimes you'll get out of trades. That means you don't find any trades. Then of course, what do you do? Yeah. And of course, there are times where really there are no trades to do. Then of course, you just don't do anything. You just sleep, right? You just sleep early. Yeah. And of course, if you actually want to find trades, there are also ways for you to actually find opportunities or find trades, both as a trader and also as an investor. And of course, one of the way where we actually use to find opportunities is actually using scanners. And I mean, at the end of the day, when I trade any stocks, right, I would also want to know a bit more on these stocks, and I would not just trade on a so-called pure technical pattern without knowing what the company is all about. Yeah. And of course, that is my trading style. I want to actually be more comfortable in the stock which I trade, because if I want to actually trade the stock up, then of course I would actually want to know that this stock is actually a strong stock, and a stock that can actually go up in time. And of course, if I want to trade a stock down, then I want to really know that this is actually a very crappy stock, that the stock price would actually come down, right? So that is actually what I do. And of course, to do this, I at times, I mean, when I am actually out of trades, I do use some form of scanner to actually scan for trades. And let's see. Okay. So one of the scanner which actually you can actually use, right, is actually from this website. Let's see if it's here. Yep. From this website, you can actually take this down. I can also put it on the chat. Okay, let's see. Is this up? Okay, yep. Let's put it bigger. No, too big. Okay, let's put it on the chat. Okay, so this actually a stock scanner where you can actually use is actually on cnbc.com backslash stock dash screener. Yeah. So this is one screener where you can actually use, and it's actually a free tool. I did not even register for this account. You can actually register, and I don't know, this pro is probably to read news, but I just use this stock screener to actually scan for uh, stocks. I mean, you can use it for either scanning stocks for your investment and also trading. And of course, if you're using to scan trades for investment, then of course there are some criteria which is in this website where you can actually put in order for you to actually get quality stocks, like I mean stocks which are good. Yeah. Of course, I can actually share with you some criteria which you can actually use to scan for fundamentally strong stocks. Yeah. To either trade or also to invest. And of course, one of it, just go on this, and you will be led to this thing stock screener here. And what you can actually do is there are categories for you to actually select here. Yeah, there are actually categories for you to select. And here you can actually put company overview, which is basically nothing here. You can put industry, which I do not want industry here. Okay, you can go by company overview, and of course the company overview, I think one thing which you may want to choose is industry. And later on I will also go to actually show you the industry scanner to actually scan for some stocks in certain sectors where it may interest you. But first we actually go on to actually scan for fundamental strong stocks which you can actually invest in, or stocks you can actually trade it up if there are actually technical patterns which gives us trade opportunities. Okay, so company overview, we won't touch this first. Performance is actually one thing. Nope, you don't take this because these are mainly on the share price change. You don't take this. Growth trends is one. I will actually pick 5-year revenue growth as one criteria, important criteria. And basically, the percentage which I would apply is actually at least 20% annual 5-year growth. Yeah, greater than 20% as one. Then, of course, if you click this, then there is actually 958 companies which match your criteria. Then, of course, you need to refine it down based on other kind of criteria. And then we can go to valuation. I won't touch valuation so much first. Management efficiency. The two criteria which I use is return on this return on equity. Yeah. So this one I will make a tick, and basically this is actually 15%, and then the other one which I put in is this ROIC, again 15% as the criteria. And then from this we take analyst estimate. I won't take any of this. Yeah. And then financial strength, I would actually pick the current ratio, and I would want the current ratio to be above 1 as the criteria. Yeah, above 1. And then okay, free cash flow. Okay, actually here, let's see, this is financial strength, then the current financial. Okay, actually free cash flow, I would actually want to to see that there is actually continuous improvement in free cash flow. That means yearly increase in free cash flow. Yeah, but of course for this screener, the criteria is actually not there to have cash flow growth for yearly improvement in cash flow. So what I just picked as the next alternative is free cash flow per share, free cash flow per share. Yep. And I would want to put it just as one here. Yeah. So basically, to put it as a positive figure. Yeah. And then of course the other one is this net income. And of course, again, I would actually want to see net income growth, but of course, there is no tick here to actually put on net income growth. So basically, I put in this is actually 12 TTM, that means basically the trailing net income, which I just put above 500 million. Yeah, I mean, 500 million is quite sizable profit for any companies. So of course, bigger companies make billions, but I just put in 500 million. You already got 928 matches here. Yeah. So with all these, right? So with all these 6 criteria, which I have actually chosen, then of course, for companies which matches all these, what is that? All these 6 criteria, there are actually 15 companies. 15 companies you can actually see here. There are actually 15 matches. 15 matches. Then of course, after that, you actually click view screen matches, right, to actually see which are the companies which actually came out from this scanner. Then of course, one of the companies which showed up here is Adobe. Okay, Adobe is one company which I am also both trading and investing. Yeah, and of course, since the last since when is it, November, right? Since after November, where it actually reached all-time high here. Yeah, Adobe has actually retraced back to the 540 level. Is actually slightly even below the previous low here of 557. Yeah, but of course, it actually bounced up here. Subsequent, there was only 1 day, 2 day, about 2 days. 2 days. It was actually below that previous support level. Yeah, only for 3 days, and of course, subsequent to that, there was actually a bullish candle showing up above the previous support. Then at this level, I have actually put in uh, 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 the new investment level at the 550 on the investment portfolio, which I'm starting to set up one more new investment portfolio for our own personal investing portfolio. Yeah, so 550 is actually the level which I actually added in, and of course, subsequent to that, last week also, when there was some retracement here, we did another trade position on Adobe using bull put spread, which is a credit strategy. Yep, credit strategy, bull put spread, and that was actually done at the level below here. I think it was, if not wrong, it was actually at 525 520 525 520. I think is that. Let me just check. Adobe is done at 525 520 was the level where we actually did a bull put spread. Yeah, bull put spread. Yeah. Okay, bull put spread is actually selling a put. Yeah, and then at the higher strike, and then buying a put at the lower strike to cap the loss on the trade. It's a defined risk trade, and basically we're talking about a risk to reward ratio of risking about 4 to 1 on a single put single transaction. Yeah, that means the returns are about for each dollar, basically you're risking more, right? Yeah, but these are typical of credit strategies, but the probability of win is actually much higher. Basically you can actually get a probability of win of about 70 to 80% in such trades, such kind of trades, especially when there are actually big retracements coming. Yeah, and it also gives you time. I mean, basically time works in your favor. You can actually hold on the trade longer, even if it retraces lower, as long as it don't continue to be at this level on expiry. Then you will also win in the trade. Yeah, so that is one great thing about credit trades. Yeah, you take less premiums. That means you collect less, you risk more. But of course, the upside is you have higher probability of win, and you can take time to work in your favor. Yeah. So that was actually Adobe trade, and also investing position, which we have actually put in. So the others, you can also see in here what are the things that actually pop up. This is the one medical company which I don't know. And of course, when you don't know the stock, does not mean that it's actually no good. What I suggest, after you have actually get this list, right? After you have actually get this list, is to actually go and Google it and actually look at the stock, or you can even check it out in your trading platform. If you are using Think or Swim, you can actually just put the ticker into the analysis tab, and click on fundamentals, and they will actually show you the information about these stocks in the Think or Swim platform. Okay, there is actually one question coming in from Andy. Yeah, okay. Andy is actually asking, bull put spread strike price how far apart? Okay, it depends. It depends on you. Okay, and of course, it can be even $1, $2, $3, $4, or even 10 or even 20. Of course, the bigger the spread, of course, the higher the capital involved and the higher your risk. And again, the other side is the more premiums you get. Yeah, for me, basically, I would generally trade stocks which are actually above $100, right? Trade stocks which are above $100. I would go for a minimum of $5 with $5 with. Yeah. And of course, if you are trading stocks like Google or Amazon, you can even go up to $10 with. But of course, the risk which you are actually taking, you may lose $10. Basically, the risk is probably going to come to about $700 to $800, depending on how rich is the premium, and how good the how high the IV is, the implied volatility is for the stock. If the implied volatility stock is high, then of course you can actually get better premium. Stocks like Google and all, I think you can actually get about $200 over premium for 10 with, and of course $5 with, then basically you should not get anything less than $1. Okay, and of course delta wise, basically I would actually tend to trade at delta at around 20 for bull put spreads. Around 20 would be the delta. That means the short strike which I put basically would be around delta 20. And generally, when you actually do a delta 20 trade, then you would more or less fall to around one standard deviation of the expected move for the time period. I mean, if you guys do not know what is that, because there are a lot of jargons here, then of course it's basically in a simple terms, it is what the expected move. That means if you do a 1 month expiry, and then one standard deviation move for that 1 month expiry would be the price where the stock is expected to go up or down, up or down. And of course, if you're doing a bull put spread, then of course that is actually expected to be the price of the stock coming down within that 1 month period, coming down to that price. For example, if Adobe was actually trading at how much? 500 and how much here? 564, right? 564. And of course, if I did trade at say 525 earlier, then basically that expiry which I chose, probably the expected move would be $40. That means it would expect to drop down by $40 within now until the expiry, which is probably for me, trades would be around 30 to 45 days. 45 days is a normal period where I actually pick to trade on this kind of spreads. Exit wise, of course, as I said earlier, because of the market volatility, which I don't know whether it will continue, I will tend to actually exit earlier. I mean, I won't wait to 45 days until full expiry. As long as there is actually a profit of about 50% up, then I would actually exit the trade. I mean, if it comes in a week or in 2 weeks, I would also exit the trade when basically I reach that level. Yeah, so that we get in and out quick without taking the so-called market risk that it will actually go up and down like last year. Yeah, so that is actually what we have been doing for such kind of strategies. Yeah, get in and out quick. Yeah, get in and out quick. Yeah. And of course, the other thing good about these kind of strategies is that when the stock price drops and you actually enter the trade right during a retracement, right? We actually enter the trade during the retracement. That will actually give you already added buffer. Yeah, because let's see where's Adobe. Okay, because the stock here has actually gone down to this level and you enter a trade, right? Basically, it has already retraced how many percent here? It has already retraced. I mean, I entered somewhere here after the reversal happened, right? So basically, it has no. I think click wrong thing, not this. Basically, it has actually retraced about. The stock has actually came down from the high of about 19%, 19% to the level where we entered the trade. And of course, if you're doing at 525, right, then from 19%, then the stocks would have to drop another 6% before it hits your strike. So basically, the additional 6% here give you additional buffer before it actually comes close to your strike, which pose a risk to your trade. Yeah. So that is one thing which we do. We do it after a retracement. We do it after a retracement for this kind of strategy. Yeah. Or even on a big down day. On a big down day, we can also do a trade like this. For example, yesterday, if you have noticed what happened to Adobe, is that when the market opened, right? When the market opened, Adobe actually went up by about $3 or $4. You see, when the market opened, it went up $3 or $4. And of course, during the day, the price has actually dropped up to about 12 or $13 during the day, 12 to $13, all the way to 553. Yeah, and it closed the day when there is actually it closed the day here how much at $3. $3. Yeah, I think it went down all the 553. It closed 553. Yeah, correct. So from the time it closed to the lowest is another $10. So it actually went down by $13. Yeah, or even more because it went up to 575 to 553. 575 was the highest. 575, 553. Yeah. So that was like $20, right? The price. Yeah. So you see that it is actually quite volatile. Yesterday, I did not know what happened, but the market was green whole day. But basically, Adobe sold off, went up, sold off, and then I think when it was sold off, probably many people took the opportunity to buy in, and it pushed the price up. Yeah. Okay. So this is the scanner, right? Scanner. So let me come back to the scanner. Okay, so this is actually the results. Uh, okay, so the results are in the scanner. Are you back to the scanner? I think, yeah. Okay, so you go through the list. Basically, you can actually scan this using the criteria. You can even use your own criteria, whichever you feel comfortable, which you actually want to add in. You can actually add in, and then from there, look at the stocks which you actually see here. For those which you do not know it, then of course Google it. Look at the price in the price charts. You can use TradingView. Is a free free and very good what is that charting software. And of course these are the things which pops up. JD.com also sold off yesterday, but it recovered lah. I mean, China stocks nowadays is quite volatile. um, one day up, one day down. So like yesterday in the first part of the trading hours, until before I slept, all the Chinese stocks were down. And when I woke up, all the Chinese stocks were up, including Alibaba. Actually, also showed a positive close yesterday. Yeah, before that, it was actually red. Yeah, so still volatile on the Chinese stocks. Yeah, and then this is Kirkland. Kirkland. This is actually the gold mining company. Facebook, of course, you guys know Facebook, yeah, and of course, Facebook also faced some. Was it facing some resistance? Let me see. Facebook. Okay. Yep. Facebook. You see, Facebook also came down 2 days ago, right? This was 31st December. This was yesterday. Yesterday, yeah, it went up and it closed plus $2. Today is actually going up. Yeah, going up. Yep. So that's Facebook. And then what else? Okay, Tor Industries. Okay, Tor Industries is one company which I mean, I've not really invested or not really traded in this stock, but I think it is actually related to some Tor. Let's see what Tor does. Tor is Google. Tor. I think it's related to RV. RV. Yeah, RV. Yep. Recreational vehicle. Okay, so it relates to recreational vehicle because of the COVID pandemic, right? A lot of people has actually started to buy their own RVs, to buy their own RVs, yeah, and it has actually gone up and retraced back a lot recently. Yeah, it has actually gone up all the way to a high of 150. This was actually in March, and currently it has actually retraced to this level, And let's see. Okay, okay, and probably some trading opportunities in this stock. I have not got any positions. Yeah, it seems to be trading in range. Yeah, in range. Since here, this is a higher level. Yeah. This is 99. It went down to about 90, and it actually retraced up. I mean, basically typical of I don't know. I mean, all the also travel related stocks are also rebounding since I think December here. It actually went down, but this one actually retraced here. Yeah, and earning wise, basically it is surprised. It is actually doing worse than estimate. Yeah, probably because of that, the stock has actually sold off after earnings. After earnings, it has sold off, but it has actually rebounded. Yeah, maybe some trading opportunities here. We'll keep an eye on this lah. So again, these are how I start to actually look for trade opportunities. I mean, from the scanner here itself, we get to actually look at the trading opportunity or investing opportunity for Adobe. Then just now we were actually looking at Tor is one which flag out. The others you can also see here. Yeah, pharmaceuticals, VRTX. Yeah, VRTX. Pharmaceutical may also be of interest lah. Pharmaceutical may also be um, one sector which may interest me for 2022. Yeah, pharmaceuticals. Yeah, because these are actually I mean companies which came out of here would have fulfilled all these criteria. Yeah, and of course if it fulfills all these criteria, then of course there may be something good about these companies here. So it would be good for you to actually have a look also when it pops up here, to do some research and spend some time to actually understand what these companies are actually doing. Yep. Okay, and the other one which I actually wanted to show you guys, yeah, just some more minutes, is to actually look at industries. Yep. Okay, just now remember earlier we were actually talking about industries, right? Company overview, industry. Okay, if you click industry, right, then you can actually go to whichever industry that might interest you uh, to trade in, because at the end of the day, a lot of opportunities also comes in thematic trading is also one way where we actually trade based on what is in trend. Of course, earlier last month, what was in trend was actually travel, right? Let's see if there's travel stocks. Travel, hotel. Okay, hotel and motels. Okay, let's pick hotel and motels. Okay, and then of course you can pick other financial strength. Probably you can pick current ratio. You want it to be one. Oops, what did I do? Okay, motels. Current ratio, pick it to be one. You can take less. I keep clicking this select all. Okay, I mean for thematic, you don't need to actually take so many items because this is actually a thematic one, which you probably need to have some basic criteria. Company performance. No, I don't take these growth trends. Maybe growth trends. I mean, travel stocks, basically you cannot have a growth trend because probably they won't have a growth in the past 2 years, right? Then yeah. I mean, just if you pick these two greater than one, let's see what comes out. Maybe profitable. I mean, just to make sure that even though the sector is down, right? Maybe you also want to actually pick companies that are profitable. Where's the current financials, net income. Okay, let's put net income greater than, let's put 50 million. Okay, 50 million still have 6 companies. Okay, view screen matches. Okay, these are the stocks which came up uh here. I mean, I don't know this, I don't know this. This is Huaju Group, probably a China company investing in hotels, travel and leisure, Ville Resort, Windham Resorts, maybe WH. Yeah, so these are the things. Of course, once it pops up, then you can actually check out what whether it actually interests you. Check out the charts and actually see. The other one, which actually looking at, let's say, is mm, like I said, pharmaceuticals. Yeah, was one, maybe put 500 million. Okay, pharmaceutical was one. Yeah. So Amgen, Cardinal Health, yeah. So these are also very strong. What is that? Pharmaceutical company, Amgen. Amgen, we were in Amgen trade earlier. Amgen, let's see, AMGN. Amgen actually sold off earlier. Yeah, sold off earlier, huge dip, and now it's actually trading sideways. Yeah, sideways. And then what else came up? CAH is Cardinal Health. Yeah, this may also be something which may interest us. CAH. Okay, okay. Look, CAH has actually bounced off from all the way down 46 to 52. Yeah, 52. Okay. Of course, we would not actually enter any trades at this time. Probably if it retraces back, we may see to get in a trade opportunity, because it has actually came down by quite a lot, all the way down to 2020 low here. Yeah. So basically, you can see this would be a uh, good level at about 45 to see any trade opportunities that actually come by. Yeah. So Cardinal Health, you can actually do that. So this is how basically I use this kind of screener to screen, and then from there basically I would go over to check the charts and basically see if there are trade opportunities. Yeah, Pfizer, Pfizer. I mean, it's coming down already from its high. J&J actually we sold off J&J last week. Yeah, J&J. Yeah, we sold it off last week when it topped about 170. Yeah. Because we were in a trade for J&J, and we were assigned the stocks. And from there, we basically, I think we were assigned the stocks somewhere around here when it actually dipped here. Yeah, then of course we waited to recover from our positions. And I think once we were assigned the stocks, I was actually selling calls until I think last Friday it actually got called away at 171. Yeah, so that was Johnson & Johnson trade for us. So screener, yep, screener. And then of course there are other screeners which you can actually use. The one which is also on Finviz. Finviz is also another platform where you can use screener, Finviz, besides the one which I've actually shown you on CNBC. Finviz is one. Okay. Cardinal Health, when it raises back low, can sell put, is it? Okay. Personally, I have not traded on Cardinal Health. This is actually one stock which I just started to look at it, and I will do more research on this stock, and basically see if there are any opportunities, but just a short one. Let's see, CAH, CAH, IV rank 16, IV 30, and then basically 55. I would think Cardinal Health, the premiums for Cardinal Health is not that great to actually sell puts, because at Delta 20 puts, basically you only get slightly above 1% premium. You slightly get 1% premium. Yeah. So probably not a great put naked put candidate. And of course, if you actually want to trade this stock, I would say because it is only 40 over dollars, right? 40 over dollars, $50, right? $52. Then of course it will be a very cheap candidate to actually do bull call spreads. Bull call spreads, yeah. I mean, because the stock price don't jump up quickly, then of course if you just buy a single call, you would probably need to wait very long, and the time decay might eat into your trade. But of course, if you do a bull call spread, then of course time may work in your favor for the stock to actually trade up when it retraces from a huge dip. Yeah. So different strategy, you would actually need to fit it into a different kind of stock, and how the stock behave is also important for you to know before you actually deploy any strategy. Yeah. Okay. So that's Andy. Okay. So the Finviz is also one. Did I Okay, I posted the Finviz site here. You can also use Finviz to do the screening. Yeah, of course. Here also, I've actually also do some screening here. Net profit over 20%, price to cash over one, EPS growth 20%, sales growth over 5 years 20%. And then what is that? Return on equity 15%, return on investment 15%, current ratio over one, similar to the criteria which I actually put earlier. Yeah. Then of course, once I click search, and then this is the 7 stocks which actually pop up. Yeah. Some I don't know their face. I would need to do research also to actually see what stocks are these. DQ, Etsy, of course. We know Etsy, and you can see that Etsy has also retraced quite a lot, because 2020 it has actually done very well. 2021 not so well. Yeah. Facebook, of course, this is the joint corp. I do not know this company. Yeah. And of course, if I look at the price chart, it has actually gone down by a lot. So this is probably not something which I want to look at. But of course, healthcare wise, UNH has actually been doing very, very well. UNH has actually reached all-time high towards December. Yeah, UNH. CVS in healthcare, you may also want to actually see if there are opportunities. NVIDIA, of course, it is actually gone up a lot. Of course, there are more opportunities, mainly because of the applications and all, whether you will, I mean, if the business is going to continue to grow because of the metaverse and all these things which needs its equipment, or its the things which NVIDIA sells, right? So this is actually an opportunity, and semiconductor has actually shot up yesterday. TSM has actually shot up a lot. NVIDIA also has shot up. I think some other semiconductors, including the semiconductor ETF, has also shot up a lot yesterday. Okay, the trade desk trading a bit sideways right now, and of course, I don't have any positions there. Bill, I don't know this company. Yeah. So again, Finbase is another way for you to actually do screening. So it takes maybe 5 minutes for you to screen, and of course to go through these companies, it may take another 20 or 30 minutes to see what is actually possible. Yeah, because not all stocks we know, and of course if we continue to actually trade on the Facebook, Google, Netflix, Amazon. That would be what most people trade. And of course, if you find opportunities to trade on lesser common stocks, I mean stocks which probably specialists or analysts or the people hunt for big baggers, yeah, that would actually take a bit more time for you to actually do by doing screening. Yep. So this is one way for you to increase your trade opportunities. Yeah. So that is actually what I wanted to share with you guys at the start of this year to empower you guys with more tools to actually find trades and find opportunities to invest and also to trade for the year. Yep. So we are only on the second day of the year, and of course, yesterday it has been quite a great start to both trading and also the investing portfolio. And today, I see that the market is also in green. Yep. So great 2 days of the year. I hope that we will continue to actually get this momentum throughout the year, and hopefully I can actually go along with you guys in this year's trading journey and also profit the market together. Yeah. So if you have any questions, post it here. I can take another 30 seconds to answer. If there are none, keep this for next week. Keep your question for next week, or even post it on our Facebook page, and we can also bring it up during next week's Traders Talk. Yep. So until then, I catch up with you guys. Happy trading. Have a great start to 2022, and I wish you guys a profitable trading year and also investing. All right, so I see you next week. And oops, comments on Upstart. Okay, Upstart, I have taken a position. Last week, I have told you that I'm going to take a position on Upstart. It has actually gone up by $13 after I've actually done the trade. And of course, after that, it has sold down. It actually came down again. And of course, Upstart. Let's see Upstart. What's happening? I'm still in the trade. The trade is currently negative in negative position. Okay. Okay, I'm still in the trade. The trade is actually negative. You see, it went up all the way to 163. Yeah, all the way it went up to 163, and it came back down. I think last week when we spoke, if we were, let's see, last week when we spoke, we were on. Let's see. Okay, let me see. Oh, I did not share the screen to you guys. Sorry. Let's add this. Upstart. Okay, Upstart is on screen now. Okay, Upstart. Last week when we spoke Upstart, we were on 28th of December. Okay, 28th of December. Okay, yeah. So on 28th, okay, 28th, I think I took the position on I took the position on 1st of January, 24th. Okay, I took the position on 24th of December and another one on 31st of December. So 24th of the, no, I think we spoke about this. Okay, I took a position on, actually on 23rd, probably here, I took a position here. And then 31st, when it came down again, I took a position here. Two trades. I did two trades. And of course, now it's actually coming down. Today is actually going up. I mean, basically, I is facing some resistance here lah. It's facing some resistance here. If it managed to actually breach up, then I think highly likely, possibly, and it will actually break up here. Otherwise, it will probably continue to trade down. Yeah. So let's see on this trade how it goes. If it goes back below this one, I think it goes below 135. Probably, I would probably cut the loss at that level. Yeah. I mean, I'm trading this using options, and of course, there is also downside protection because I am also putting up a bull put spread with my another debit spread. Yeah, so I'm actually having a debit spread. That means a bull call spread, a bull call spread. Yeah, but I'm actually reducing the risk of financing it slightly by a bull put spread below. Yeah, so of course. My buffer would be a bit my cost would be a bit less, but of course I take higher risk on the bull put spread, but I can have more time to see if it actually break through here. Okay, a bit over time to answer your question. No, I did upstart this. I actually did on I'm down 50% on assignment. No, I did a bull put spread and a bull call spread, and I don't know upstart you are down before when it actually had a huge retracement, or is a new entry. Because if you are assigned on upstart, then I would think it's not a new trade. You would have probably done upstart much before last week. You would have actually been in the position before the huge retracement came along. 280. Wow, 280 is actually that means basically you have actually entered the upstart trade on 280. 280 is, yeah, before the gap down, okay, before the gap down. Okay, of course, how to, okay, two ways lah. I mean, basically it depends on what kind of conviction you have on this stock, because again, many of these so-called tech stocks has huge sell down, and some don't recover, some never recover, some recover, and of course, if you are actually assigned the stocks at 280 and currently it is actually at 140 and you are still holding the stock, right? Then basically you are actually taking on the unrealized loss, because if you want to actually start to sell calls, you would probably not be able to actually sell calls at 280 with any kind of premiums. Yeah, with any kind of premiums. So I mean, I think these stocks, I mean, in terms of the product and all, there are still opportunities lah. It's just that some are highly, how to say, highly chased after stocks when they sell down and when they miss so-called earnings targets or analyst expectation, it will have a huge sell down. It will have huge sell down. So for stocks like this type, I mean, the tendency, how to say, I would not um, I would not sell puts on this type of stocks lah, which especially if it's very expensive. It's very expensive for stocks which I sell puts on, which basically have not proven its profitability at all. I would do it on stocks with below 100 or below $50. For stocks which are above 100, I only do it on very strong fundamental strong stocks by selling puts. Otherwise, I would do defined trades on bull put spreads. I would do defined risk trades. Yeah, I would not sell single puts. Yeah, because the risk is actually too big when you face situations like all this gap down kind of thing. The risk is actually too big. Yep. Although premiums may be very attractive, you can get thousands of dollars of premiums if you actually sell puts on this, but risk is actually very high. Yeah. Okay. So so that's all over time by 15 minutes. But anyway, I hope that I was able to give you some perspective, Andy, on your upstart trade. Yeah. Bull put spread is sell put, buy put at low price. Yep, correct. Yep, that is it. The buy put at the lower price is to protect you. Like for example, when you did a bull put, you did a naked put at 280, right? You could have protected it at say 270. You get less premiums, but even if the stock gap down to here to 200, right? Basically, your max loss would just be the width of the spread of $10 less of the premiums which you collected. So probably you lose per trade maybe $700 or $800 max instead of thousands of dollars right now. Yeah, you are losing basically about $140. Yeah, $14,000. Okay, all right. So great. Catch up next week. If you have any things which you want to know, let me know. I will try to actually help you during next week's Traders Talk. All right. So I catch up with you next week. Bye bye.